Welcome to the Noble Gold Investments. This is the series on gold. Why, how, should you not? In this series, we're going to zero in on gold and truly understand what it's about, the gold that drives even central banks and billionaires to hoard it. In fact, 2021, just as the world thought countries and billionaires would either go all in on crypto, central banks increased their gold purchases. According to the World Gold Council, central banks' net purchase totaled 463 tons of gold in 2021. This is the highest purchasing that we've seen in about 10 years. And the obvious question is why? Why are they buying gold? And is it worth following their lead? It's really quite simple. You need a hedge. Every portfolio needs a hedge. You need that one asset that doesn't move with all the other assets, that's stable, that is globally demanded. There's no better hedge than gold. It goes up when the market is down or when investor confidence is low, and it remains steady the rest of the time. On your screen right now is the historical data that shows that almost every time the market falls, gold goes up. In one of the biggest crashes of the S&P 500 between 2007 and 2009, gold went up 25.5%. It's a fail-safe, your last line of defense, the backup of all backups. This is the role that it plays in your portfolio. This chart on your screen now shows the historical backups, this theory of negative correlation between gold and stocks. The zero line means gold does the opposite of the investment half the time. If the line is below zero, gold moves in the opposite direction of that investment more often than with it. You can see that on average when the stock market crashes, and you have these US equities on the chart here, gold has historically risen more than declined. Gold has historically outperformed the cash sitting in your bank account or money in a money market fund. This is the practical conclusion for investors. If you want an asset that will rise when most other assets fail, gold is likely to do that more often than not. But what if the stock market doesn't crash? It's not always easy to predict if stocks will fall off a cliff. So what if they don't? Or what if the market is just flat for a long period of time? You might think that's unlikely given the number of risks inherent in our economic, financial, and monetary systems today. But look at the 1970s. It had 3 recessions, an oil embargo, interest rates that hit close to 20%, and the Soviet invasion of Afghanistan. Here's how the S&P performed, along with how gold performed. The S&P basically went nowhere during the entire decade of the 1970s. After 10 years, it was up a measly 14.3%, including dividends. Gold, on the other hand, posted an incredible return, rising from $35 an ounce in 1970 to January 1980. It hit $850 an ounce, which is a 2,328% return. In other words, gold's biggest bull market in modern history occurred while the stock market was essentially flat. That's because the catalysts for gold were unrelated to the stock market. They were more about the economic and inflationary issues occurring all the time. We have to allow for the possibility that this happens again and that citizens are drawn to gold for 3 reasons unrelated to the performance of the S&P. So when you see your articles or hear people telling you stocks are a better investment than gold, they either don't know what they're talking about or they simply want you to buy whatever it is they're selling. Gold should not be compared to stocks, bonds, crypto, and other assets. All those assets should be in your portfolio, but they're not supposed to replace the role of gold. Diversification, that's a strategy I personally believe in. So while you may have some risky piles like crypto, medium risk stocks, maybe you have some conservative stuff like bonds, you do need an asset that does not move in the same direction as these assets. That being said, do not expect gold to turn you into a millionaire in 5 years. What it does is it freezes the value of your money, freezes the value of your investment. That means if you have $1,000 now and you convert that into gold, it will be able to afford the same thing 10 years from now. And that's really the bottom line. Hedge, hedge, hedge. The last thing you want is to work your entire life, secure your retirement, only to be a victim of an economic crash. You need a hedge. There's no other asset that's proven its ability to hold up its value, to keep pace with inflation, and it moves inversely with the market. This asset, this number one asset is gold. Hedge, hedge, hedge. That's why you invest in gold. That's the role that it plays. Now that we know the role that gold plays, let's look into other characteristics of gold. Next up, gold's demand and scarcity.
With a team of seasoned experts, Noble Gold provides personalized investment solutions tailored to your unique financial goals. Noble Gold offers numerous benefits to investors. Firstly, it provides a hedge against economic uncertainty, safeguarding wealth during market fluctuations. Secondly, investing in noble metals like gold ensures portfolio diversification, reducing overall risk. Thirdly, gold historically maintains its value over time, offering stability in volatile markets. Noble Gold offers tax advantages such as IRA options for retirement planning. Moreover, it's a tangible asset immune to cyber threats or digital vulnerabilities. Lastly, Noble Gold provides expert guidance, assisting investors in making informed decisions to secure their financial future. Specializing in precious metals IRA and 401k rollovers, Noble Gold offers a secure haven for your wealth. From gold and silver to platinum and palladium, Noble Gold offers a diverse range of investment options to safeguard your assets against economic volatility. Choose stability. Choose growth. Choose Noble Gold. To get your free gold and silver investment guide, click the link in the description.